Hello, followers of the 4-year journey. This is Bob Lucas, June 26, 2025. I hope you're well. Here's another installment of the 4-year HODL journey. Been a few months since the last one. The last report was had some tones of being a little bearish, of course, although still maintaining that the 4-year cycle was perfectly intact. There was some concern that we could be breaking down, and I'll cover that in a minute, but it looks as if we've overcome those hurdles and that we are now in a position for what I'm calling sort of a perfect storm that's brewing right here, a combination of the narratives around Bitcoin, crypto as a whole, the regulation, government involvement, institutional involvement, sovereigns, and a combination or confluence with fundamentals that we're seeing in terms of supply, where we stand in the 4-year cycle, and other factors like trust and time that play a major role in the adoption of Bitcoin. So I think you're going to find this report relatively or significantly bullish because of these perfect storm factors that I describe, and we'll get into in a minute. This is certainly the most bullish phase of the 4-year cycle. We're now sort of on the cusp of what traditionally has been the beginning or the blow-off phase of a cycle. So I'm going to cover that obviously here. I'm also going to introduce, although I've mentioned this numerous times over the years in these reports, in the 7.5 years of posting these 4-year cycle, 4-year journey reports, the idea of a double cycle blow-off. Some may call this a super cycle. I don't like to use that term, at least not anymore. I think it's kind of been a term that's been thrown around for many, many years. But I do think it's time, 15, 16 years into Bitcoin's adoption and looking at the arc of adoption from the initial kind of believers in an experiment really, to the adoption of the tech bros, to the retail, now institutional. I feel that all of this does support an idea that I've presented in the past that we're going to see a double cycle blow off, meaning a traditional 4-year cycle that is mostly coupled, or you'll give on the chart, looking back, will give the illusion that it's one long cycle. It really would be kind of the ending portion of a 4-year cycle and a blow off early phase of a new 4-year cycle. We'll cover that in a minute. Of course, I'll cover the model portfolio as I always do. So let's go into it here. First thing we want to look at, of course, is where we stand in this 4-year cycle. And this is the monthly chart, of course, going back to the November 2022 lows, the end of the last 4-year cycle, the beginning of this current 4-year cycle. That marked the end and the start of a cycle. All cycle lows mark the ending and the beginning of a cycle. And you've seen the progression in this cycle has been very, very consistent. The pullbacks in this 4-year cycle have been restricted mostly to 20% drawdowns with a couple of 30% declines, unlike prior cycles where obviously there's a lot more volatility with an asset class that was newer. But I think that a lot of the lower volatility that we've seen this cycle is really speaking to the idea that there has been significant institutional adoption and accumulation this cycle, not allowing the pullbacks to get ahead of themselves, and institutions essentially finding value in a dip of 20% or so. And so this cycle has been different but from other cycles because of how the dips have been bought and not allowed to run into much deeper corrective territory. This cycle has also been really interrupted by sort of these 3 main sort of pause periods, one that we're kind of in right now. One, of course, was the first summer 23 pause, a 6-month sideways, 20% decline only, that led to a major expansive move up into the high of what I call the first half of this 4-year cycle, pulling back into the midpoint of that cycle. As you can see, that low right there occurred around the 22-month mark, almost at the midpoint of a 4-year cycle, ending the first phase of the 4-year cycle up, down into a low. This was the first real correction that we saw at around about close to 30% down to the bottom here in August. Then we had a new administration come in, and of course, a lot of the narrative has shifted significantly since the Trump administration has come in. And now we're in the second half of the cycle, a move up to highs, another correction right here, of course, and at the moment working on the 6th month, or at least the 5th month since peaking. We've made a higher high since then, very, very briefly, but this is the range and a foundation that is being built, in my opinion, that is going to be the launching pad for the final phase of this current 4-year cycle up to a high in probably the October timeframe if this mirrors prior cycles. I'll get into why I think that may not be the case this time, and that how we may be looking at a peak not until February or March that leads to the double cycle idea. But for now, just sticking with how prior cycles have behaved. And of course, if you haven't seen any of the prior videos, you'll know that it's not a huge body to go on. It's just 3 other prior cycles, but essentially you've got this 3 years up, 1 year down rhythm to the 4-year cycles, 33, 35, 35 months up to a high, leading to a bear market that lasted around about 14 months, 12 to 14 months down to the low, and then the birth of a new cycle. This cycle, as you can see, far more consistent. It's been a tighter range on the way up, hugging that 10-month moving average all the way up there. And really, it's been more of a sustained or sustainable move, in my opinion, that is characterized in this cycle. And I think, again, that has a lot to do with the type of player involved in this cycle. We don't see a whole lot of retail participation. We've seen a meme coin kind of movement that's come and gone, fizzled pretty quickly. Nobody made a whole lot of money, at least not broadly, to bring in new retail participants. It's been mostly an institutional play, and that just speaks to the evolution of Bitcoin, the adoption by bigger players, deep-pocketed players, as it matures and gains relevance in society as a whole, and certainly in the financial community. But this cycle, following at least the script, in my opinion, to prior cycles, is heading closer and closer to that 4-year cycle high. Currently, we're sitting on month 31 with no real signs of any mania that you see typically at the highs of a 4-year cycle or any 4-year cycle in any asset class. We haven't seen that sort of blow off, absolute extreme sentiment that you typically would see near the top of a high. We had something a little similar back March 2024. I just don't think it got out of hand in any way. And it doesn't really matter, because since that period, we had the decline and clearly moved beyond and into all-time high territory in November. That's been left behind, and that sentiment has been essentially erased. And now this is a new market in this current cycle. So all of this price action here supports another move up into all-time highs and beyond, and an expansion towards that next 4-year cycle high. Typically, the final phase of a cycle is around about 4 to 6 month, really extreme momentum gathering, sentiment gathering, moving towards that extreme level before a blow-off. And we haven't seen anything, again, like that, as you can see from last November of 2020, when you had that sort of final move up to that peak, even though it had another higher peak at that point. Similarly, back in 2017, we fondly remember that period, as you can see here, around about a 7 to 8 month move when it broke out to a peak where sentiment just became obviously so extreme that the market topped. We haven't seen that yet, and it leads me to believe that we still have a period like that, possibly 4, maybe as much as 7 to 8 months of price discovery to the upside. And that really, as you can see from this chart, where we stand today at this sort of $107,000 to $110,000 level, 5 to 7 big green monthly candles, begins to open up some pretty big targets in terms of where this cycle can potentially peak. Don't like throwing out price targets because I'm not necessarily great at upside price targets. I'm more focused on sentiment and time. And from a time perspective here, sitting on month 31, as I said, we have potentially 4 to 6 months of an upside move. That doesn't leave a lot of time up to a traditional, when I say traditional, what we've seen in prior cycles, around 35 months to a high, which is why I'm open to the idea that if we've still got a sort of a 6 to 7 month expansion to a peak in this cycle, that we could be looking at something like a 39-month high, allowing for that time to develop to a peak, and that would lead us into, say, maybe even a February or March peak in the cycle, which leaves less time for the bear phase of the 4-year cycle to begin, and supports the idea of a double cycle move, meaning that once we peak in this cycle, and again, don't get hung up on where I'm placing this monthly high candle, but potentially February, March of next year for a high, which would be around about a 39-month high. Less time down to the 4-year cycle low. An interruption, obviously a bigger decline than what we've seen throughout this cycle, but nothing like what we've seen in prior cycles, and allowing for another blow-off move in the next 4-year cycle. Before I get there, how does and why would that potentially happen? And I think when you talk about the bull case for Bitcoin, there's really a confluence of some very powerful narratives and actions by institutions and traditional financial organizations with cycle timing that lead me to believe that we could be on the cusp of this perfect storm idea that I'm seeing. We've seen, obviously, the ETF's been out for a while, but we're seeing a significant appetite to buy Bitcoin through traditional ETFs, huge inflows that are coming in from there. We're now, obviously, Michael Saylor, MicroStrategy, or just strategy, has been accumulating for some time now, but that has been successful enough to encourage many different entities from around the world, not just the US, from everywhere, in fact, to adopt this corporate treasury model. Some of them just simply buying some Bitcoin as an alternative asset on the balance sheet, but many of these entities adopting really a model of raising capital, buying Bitcoin, and using some financial derivatives and leverage to pump up that stock price. That seems to be working, at least for now. And if that will continue to work, it will encourage more and more people to do that, which ultimately means, of course, more buying of Bitcoin. We've also seen a dramatic shift, even from some of the old school, going back to the 1800s even, institutions, banking and financial institutions, who have now pretty much caved in. Even the ones that sort of have been very negative on Bitcoin have changed tunes. And they've changed tunes because, one, they can no longer ignore the fact that their competitors and their rivals are adopting and building in the space, partnering in the space, and are seeing the upside potential that they just can't ignore anymore. So it starts with a narrative shift from them, from it being a scam and a Ponzi and so on, to being a legitimate asset class. And they have to change that tune and that narrative first before they can even begin to invest and look for ways to profit from this space. Of course, I don't need to remind you of the Trump administration that's in power now, a significant 180-degree shift in government stance on crypto, from really an anti-crypto stance for many, many years, pretty much since the adoption and the beginning of Bitcoin, to one of complete acceptance and a regulatory framework, a regulatory set of clarity that comes with the framework there, pro-crypto legislation that's coming in place. Of course, the more recent stablecoin work has attracted significant interest, which will have a knock-on flow and effect into Bitcoin. We also are likely, extremely likely, to have, for the first time, a pro-crypto Fed chairman come in. Once this current chairman, Powell, his term has ended, that chairman obviously will be appointed by President Trump, and that person will have to have a very pro-crypto stance. But also from a government deficit perspective and spending perspective, we know that that's not going to change. It's going to be status quo in terms of deficits being run by the U.S. government, and also pretty much all major countries are suffering from that, which I think is ultimately a very pro or very good for Bitcoin, where capital seeks the safety of some of these alternative asset classes. We see gold has had a tremendous run essentially on that narrative. And I definitely see, even though Bitcoin obviously performs well on a risk-on environment, there is still the element of where can I find some safety with growth, and I think Bitcoin certainly offers that. And there's the potential for some more nation-state accumulation. I'm not as confident that you're going to see a lot of that in this cycle, but it's out there as a potential bonus. But even the idea that this confiscated Bitcoin through crimes and digital crimes and crypto seizures, you're seeing now this idea that they're not going to auction off or sell off whatever crypto they seize. And that's a de facto reserve in some ways. The fact that they're no longer selling this into the market and adding new supply is in some form the accumulation by sovereigns. So there's really so many narratives that most of these didn't really exist, not even just 18 months ago or when this cycle began back in early 2022, and they've now all converged into Bitcoin. And Bitcoin, from a market cap perspective, is still relatively small, considering the mind share that it's attracting, the amount of mentions that it gets, the amount of attention that it has, and the amount of institutions and organizations that have basically come out and supported Bitcoin and their plans to build and provide product in this space. The market cap doesn't represent the reality of what lies ahead. From a fundamental perspective as well, we're clearly past the last halving, which means less and less supply that is on the market. And the last thing that doesn't get spoken about enough is the idea of trust and time. And Bitcoin really being all about time, in my opinion. As time progresses, trust improves, where Bitcoin continues to remain up and secure and decentralized and available. As time progresses, the remaining kind of negatives or the perceived risk about Bitcoin being so new and unproven and untested, they begin to wane and those concerns go away, which means more capital is feeling better about being parked in this sort of new alternative asset class. It's okay for you being more tech savvy, probably younger, more digital, embedded, to see the benefits. But if you're an old school banker in your 60s, commanding or having tens of billions of dollars at your disposal, it takes time and a confidence to be able to say, you know what, we do want to put some of our money into this asset class. And that's, I think, what you're seeing now is from a period not too long ago where you'd go into financial media and you have some people sing its praises and many others come out and openly attack it. You're not seeing any of that anymore. There are pretty much no deniers or no skeptics. Maybe Peter Schiff is one of them, but I secretly think he's holding quite a bit of Bitcoin, to be honest with you, and trolling everybody. But you're not seeing any of this commentary anymore, this negative commentary anymore. And that is all about confidence and trust that is being built. That, coupled with the fundamentals I spoke about and all those bullish narratives, put this cycle in the position of being in this sort of perfect storm for a major upside move here to come in the near future. So positioning-wise of the cycle, supported by those narratives I've described, lead me to believe that we are on the cusp of a major move. Now, timing-wise in the short term, a little more difficult, of course, to predict. I certainly can see the idea that certainly if we're going to move the top range up to maybe February or March, that does support the possibility that, hey, we're not going to break out right away. We may need to just spend this couple of months here into maybe August, complete the summer doldrum period. Summers can be kind of quiet in general, and pull back just a little bit, or maybe even just stay range bound. That's difficult again to determine before making that move up to the highs. That is something we just need to be patient on, wait for the eventual breakout and then the expansion phase of the cycle. But what I can say, I think with a little more confidence, is that once we kind of break through this 110 level where we've peaked here on 3 different monthly wicks, once we break through, I think you're going to find that there's going to be a pretty significant or sharp move to the upside that can get us into some bigger numbers very, very quickly. So you don't want to be caught off guard on that or by surprise. You'll notice even in this cycle alone, off the lows, you had 3 big months where it went from 16 to 30, doubled. And then from here, you had 5 months from 25 to 75, straight up without stopping. Then a 3-month period here from the lows at 50 to 100. So you can see how once it makes new upside territory and there's price discovery in just a short 3 to 5 month period, you're seeing kind of this doubling effect. And again, not throwing out numbers where they're predictions, but looking at the rhythm, looking at the pattern that we've been seeing in the cycle. A breakout to the upside can see Bitcoin essentially almost double in a very short period of time. So there's a significant upside potential still to come in this cycle. Just want to mention something about the last video, the last cycle. From a shorter term, intermediate term structure on the weekly cycles, there was a breakdown here that I think shouldn't have happened, that led me to believe that there was a greater chance of a bull market top. And that's still potentially still there. But I think that's waned a little bit. In the last video, I said there was around about maybe a 33% chance that we're looking at a top or a double top, and a 66% chance that the cycle still had a way more move to the upside. I think I'd want to correct that a little bit now, given this new move up to a new high, and possibly say that's more like a 20% chance that this is a complex sort of top that's developing. And really, I think that the primary view remains and has remained throughout this cycle that we're heading up to a big peak in the November timeframe, with the idea introduced today that this could be extended somewhat into a February-March move that is part of a double cycle move. So let's introduce the double cycle. Don't take this as me saying that's what's going to happen. I think some people who watch my videos kind of take every view at absolute face value as being an absolute prediction, or a view that has no alternative outcomes. In my investing journey, I don't like to necessarily look at things as being absolute and that's going to happen and that's my prediction and that's how I'm going to be positioned. I feel that type of mindset leads to is very bias driven and leads to a situation where one cannot respond well to a changing environment and a changing structure and price. So I like to lean on obviously these are all possibilities, they're not predictions, and like to view these as from a probabilistic perspective, not that they're tied to any significant metrics or data where it can come up with an actual probability, but they are based on sort of prior cycles and my knowledge of cycles of what I think the probability of something like this occurring. So the probability of the possibility of a double cycle is really unknown, but I'm introducing it because I do, and I have seen in other asset classes, this sort of double top move where you have one cycle blow off, and instead of seeing a 12-month or longer bear market period that completely resets sentiment, you end up seeing a new cycle that develops quicker after a shorter duration and moves off into a blow-off much sooner, forming what is a left-translated cycle. So what we mean by that is traditionally, and I'm just going to remove some prior work here on the monthly, traditionally you get this 3 years up, 1 year down, sort of 3 steps forward, 1 big step back in the cycle. So a traditional cycle would come up to, say, this November high, again ignoring where I'm drawing the absolute top, and then sort of this 60, or actually it's been more like 70 to 80 to 85% decline over a 12-month period to the cycle low, then a slow period out of the cycle, and then maybe 18 months to taking out the prior cycle high, and then a rinse and repeat kind of idea. That's still really what we have to assume is going to be the path forward, but the idea of a sort of double cycle is one where you get this sort of blow-off move, but it's probably going to come later, maybe in, let me just draw this correctly. So there's the November high. That's your traditional cycle. Here's your traditional low, retracing like prior cycles, a good amount, and probably wouldn't be as much now with its maturity, but it wouldn't be as much as prior cycles, but you would have to expect after a move like this, a, say, 50 to 60% retracement back in a real cyclical bear market like we've seen in the past. The idea here on a double cycle is that instead of peaking, say, in October, it's really going to come up and not peak until this sort of March and April time frame. Let's just call it April for now. Spending less time in the declining phase. You'll still see a 4-year cycle, a traditional 4-year cycle measured from low to low, but it would be probably more like a 40% decline, possibly some consolidation first and a big dip down, a big shakeout. But let's say the 4-year cycle low still ends, and it should still end around that window, that 4-year window, end of next year, but a shorter pullback over time and price down into that low, followed by a very quick and sharp move up, almost looking like a continuation of the prior 4-year cycle, and many calling this an extended cycle. There'll be all different definitions like there always is. There'll be the call for the death of the 4-year cycle. I've heard that for around 5 or 6 years as well. But there would be still a drop down in this 4-year cycle. Let's just mark this as a blue. Let's mark this as a red, create the distinction. 4-year cycle low would still occur. The 4-year cycle high would be something like a 41-month move to a peak, and that creates this double cycle idea that the next cycle would only run to a left translated cycle high. The biggest surprise of all, that would be in the next 4-year cycle, as we have one continuous, what looks like a continuous blow-off move, as institutions continuously pump billions and billions of dollars into this, chasing the gains that others are already seeing, moving up and actually finally be rejoined by retail at this point. Everyone throwing their 401k, self-directed 401ks into this as well. The mania, I guess, is what you'd see in the second half of this move. Everyone's making great money until it becomes essentially an unsustainable bubble that eventually bursts. That also corresponds well with sort of a final push in Bitcoin up to more of a longer term valuation. Obviously, I think it's going to continue to rise in value, but a peak level that's going to take a long time from that point forward to digest. I'm talking many, many years before we see the next level of expansion. So this is the all-in perfect storm. Everybody's pumping this up to a number. Again, ignore where this target is. The target can be anywhere, to be honest with you. I can see numbers in the $250,000 level, the 250 level. I can also see some really crazy numbers when you see prior manias and bubbles in different asset classes, even Bitcoin in prior asset classes, seeing a 5, 6, 7x move from here over a 2-year period in a major mania is not really a stretch. Even from a market cap perspective, it's not a stretch. Seeing where gold is already heading through the $20 trillion level and well beyond, seeing a mania of this type that involves sovereign wealth, that involves institutions, that involves retail, essentially involving everybody. Seeing Bitcoin up at some of these numbers here is not a stretch. Not a prediction, but not a stretch is what I'm trying to say. But what I think you'd see in a double cycle situation is that once we form that 4-year cycle low, that we're looking at a period that covers sort of this Trump administration, lower rates to come, Fed lowering rates, more crypto-friendly regulation, more of this traditional institutional flows, sovereign flows, and so on, that just push this up to a point that's unsustainable and peaks early in the 4-year cycle, leading to a period, therefore, that follows that mania peak. That would be the first real secular bear market for Bitcoin. Bitcoin will go through secular bear markets in the future. I'm not a believer of a power law idea that it's just going to continuously go through this expansion period up because of supply constraints. I think demand cannot be ignored. And I think what you would see is just a pendulum shift where the pendulum will just shift so radically to the upside here on the bull side that it's just going to create a longer degree decline into the next 4-year cycle, the cycle that follows this one down to the lower, which would become known as more of a secular bear market for Bitcoin. Just like you see the pendulum swing within the 4-year cycles in the past of 3 years up, extreme to the one side, and then the corrective phase that corrects that pendulum shift back before normalizing up and to begin the next 4-year cycle. You're going to see, you would see this pendulum shift on a much longer degree cycle, kind of the 16, 20-year time frame cycle, that you're going to now see 2 4-year cycles joining together to create this massive sort of pendulum shift that's going to need not just a traditional 12-month decline to unwind, but more of a 24 and more period to unwind that. So when you see this 4-year cycle low end, you're looking possibly at no more than, say, a 12 to 16-month period up into what I'm calling, or what you would call in cycle theory, a left translated cycle move, let's just say 12 to 16 months, essentially fooling everybody, of course, because they're looking at this traditional 3 years up, 1 year down. But this period, this double cycle would sort of almost what looks like a joining would create that effect, and then the move up like this, leading to then what would be a period like 30 or so months, 2 or more years of a bear market with, of course, a substantial price decline. How do you get a period like that? Well, if you consider a mania lead up where so many treasury companies and just all the flows that I've discussed here on this video come together and peak, and then the unwinding process of that, the having to get away from that, the leverage that gets built up, the selling that comes with that, just takes a lot longer to unwind, is essentially what that's about. It's an ebb and flow process, and one absolute extreme is just takes a lot longer to unwind that comes back. Again, the pendulum kind of shift that I mentioned before. So this idea of a double cycle is not new. Okay, I've mentioned this in prior cycles. I thought there was a possibility that would come here in 21 leading up to a high in 23, 24. That didn't materialize, and I think now this becomes a very good candidate for this kind of blue concept idea. That doesn't unfold, and we're looking at more just traditional 4-year cycles that follow, that maybe is more like a power law, then so be it. That's going to be perfectly fine with me, to be honest with you. But this is the concept I wanted to introduce with you, and I'm going to be obviously looking forward to something like that and looking for signs of something like that. Clearly, if we don't peak by this sort of September, October, November timeframe this year, where prior cycles have peaked, and we keep running up to highs into February, March, and April, then that would shift my view on this double cycle idea in the following 4-year cycle to follow. So with that, I just want to cover real quick the 4-year cycle portfolio sitting on, it's a model, don't forget, sitting on 27 Bitcoin, and with the sale recently around 1.3 million in cash, sitting quite comfortably, not looking to deploy the cash that was sold in the last alert or the last video. For me, I just don't want to buy back. I think if you want to buy back, I mean, obviously this video is very, very bullish, right? But just for my style, I'm comfortable with making a decision, cashing out some, and leaving it there for the next cycle. You could be different. If you're younger, certainly go ahead. This model portfolio for me is based on obviously an older person that values protecting capital as well, and is comfortable to sort of sit on that and look to deploy that in the next cycle, in the future, whenever that comes, and probably and possibly at a much higher price. Who knows? That's perfectly okay with me. I think the results here on the portfolio model speak for themselves when it comes to that. In terms of upside targets, they're fluid right now. Not looking to sort of close at any particular point. I'm going to wait and see what the next kind of few months look like. One logical place might be for reducing is on a sort of big move up here into a possible October level. There is a good argument to be made that, hey, you know, don't get ahead of yourself here on these major upside moves that everybody's talking about. And certainly if we get one of these sort of doubling periods, as we've seen in this 4-year cycle, where off the lows, it's doubled over a 3 or 4 month period, that doubling kind of off these lows, or maybe if it's a little mini mania, doubling to say, you know, the 150 to 170 level by around the October timeframe, I think it would be prudent to look to trim on a high when everything is just like kind of, you know, super, when sentiment is super stretched and super bullish. If we can get a doubling off these lows that we had recently, I think just selling some of the allocation at that point would also make sense. Don't forget, this isn't just a hodl forever idea, right? So there will be some sells. Some people don't want to sell, but will basically come into the comments and say, you know, you're selling something that is forever going up. And that may be the case, right? But for me, it's not only about Bitcoin. There are other things I want to buy and other things I want to invest in. So, you know, if you've done really well, obviously it's a personal choice. But if we're talking about the kind of numbers that many of the real maxis are talking about, which is like 1 million and 2 million, 3 million, you don't really need a whole lot at that point to capture that. So if you've done well and diversifying in other asset classes that can still provide a lot of growth and performance is not necessarily a bad idea. That's a personal choice, and you have to decide on how you want to do that. I've given you kind of how I approach it. Hopefully that's helped. I believe it has. Yeah, again, it's all about risk tolerance. Age is a factor, and how much of your allocation do you have. Those have to be factored in and considered as well. So with that, I hope you've kind of enjoyed this this update, this report. I do think we are on a perfect storm. Of course, there's always a downside possibility, a bear side thing, and we'll have to look at that. And clearly, if we get back below the lows that we saw a couple of months ago, that would probably mean it's all over at this point. Retesting those lows at this point, this deep in the cycle, would not be a good look, and we would want to look to reduce positions some more at that point. But until then, or if that ever happens, we'll keep an eye on that. And of course, I'll do an update or a video if something like that were to occur. But right now, I think everything has aligned. The stars have aligned for a perfect storm, and that's bullish. Of course, control the enthusiasm around that. Keep it level-headed, and you'll be fine as usual. Again, thanks for listening. If you don't mind sharing this video, of course, that would be helpful. Wishing you all the very best. Take care.